I looked at these numbers here. On the surface, they look pretty good, but I think there are some macroeconomic issues that I guess they partly address by just standing by that forecast and not tinkering with it at all.
That's right. I think that the results in the quarter were actually quite good. They were definitely better than expected. Now, granted, they were still down year over year, but it was better than Wall Street analysts, including myself, had expected. And they took the cautious approach for the second half. They maintained their guidance, which would imply, the street numbers were either okay. Some people maybe have had to bring their numbers down a little bit. Some might bring them up a little bit. But the bottom line is they're seeing the consumer be somewhat cautious. They're buying smaller ticket items and spending on smaller projects, but doing less so of the big ticket, big project work in their homes.
What about sort of the ballast that was that contractor business, if you will, the idea that you had these sort of pro buyers that were actually, for quite some time, it seemed like really contributing to a great deal of their profitability and revenue growth?
Yeah, and the pro customer versus the do-it-yourself customer, but the pro customer is still pretty healthy relative to the DIY customer. It was the pro customers at Home Depot were down slightly year over year, but that's on top of some very strong growth for the past several years. So you got to give them credit for the growth, and they're effectively maintaining that. But the pros, their backlogs have come down. They're getting to be a more normalized level, and they are now doing smaller projects. Again, the consumer has been pulling back on the types of things that they're doing within their home. And so I think, you're seeing that ticket spend being less, the discretionary side less. And that's just reflective of where we're at from the consumer perspective. Plus, there was a lot of pull forward of demand during the peak of the pandemic when people were at home and doing projects because they were sitting at home all day. And really, once you've done a lot of those projects, you may not come back to some for a couple of years. So a lot of work has been done to upgrade the quality of a lot of people's homes right now. So we have some concern what the second half might look like as far as spending goes on home improvement.
And Joe, we only have a minute or so left with you, but I'm curious, are you able to extrapolate what we learned from Home Depot today into what we might hear from Lowe's next week, or even what we might hear from Target in the next few days?
Yeah, so I think you can. With regard to Lowe's, first off, they tend to trend pretty similar. So you might see sales come out somewhat similar, down low single digits. Maybe there'll be a little surprise relative to Wall Street expectations, but Home Depot has a lot more exposure to the DIY customer, and DIY continues to be somewhat weak. And so that's where you might see a little bit of softness at Lowe's that you might not get that we got today out of Home Depot. And again, if you look at the commentary around discretionary spending and big ticket spending, that will be prevalent at, I think, Target, at Walmart, and others as they report in the next couple of weeks, especially some of the bigger ticket discretionary companies.